Hey everybody, Jonathan Broadbent here, your host of UnWoke.Academy. Welcome to another episode. Before I dive right in, I'm going to make a housekeeping note. Last week, Wednesday at noon, we were interrupted from doing our intended weekly noon Eastern Time live stream. And that led to a discovery on my part. If you're a tech person, you'll appreciate this. Apparently, when you have fiber optic, we have fiber direct into my office, which allows me to do this podcast and things like it. There's an ONT box. I'd seen it, but I didn't actually know what it was. And apparently those go bad. So Wednesday morning last week, ours went bad. I see I'm choked up. I'm so excited about this episode and what happened last week. Our ONT box went bad and we were shut down until tech came in and got us back up and running. So I'm sorry to have missed a week. There's a lot to report on. It's been a wild 2 weeks. So setting aside for a moment all the obvious conversation that I think we need to have, I want to quickly bring everybody up to speed on all things UnWoke, PMA, etc. So for those of you who may not know where we fit and what the UnWoke.Academy is, and the financial PMA, or Private Membership Association, that came out of it, I like to explain us as where the freedom economy meets follow the money. So I'm ex-Wall Street, and I like rooting around in and discovering where the money is coming from to fund things and doing the due diligence to figure out what people like you and me, through our 401k, IRA, etc., what we're actually funding. So by that, what I mean, and not everybody knows this, but mutual funds are actually just a manager who directs your investments for you. And it's important, I think, in this era, especially, to know where your money is being invested. And if you're the type that follows things like what happened a year and a half ago now with Target and recent things that have happened with publicly traded companies and things like Cracker Barrel, etc., and talk about boycotting those types of companies, you should know that in addition to where you spend your money, you should know where you invest your money. And that's where UnWoke Academy comes in. We would much rather see people experiencing and enjoying funding things that are not woke, that are not leftist, that are not anti-American, that are not protagonist, whatever you want to call it, social democrat, social communist, whatever. There are all kinds of terms that people use, the cabal, globalist, whatever. If you don't like that stuff, don't fund it, because what you fund will become the future that next generation will inherit. Instead, let's explore investing in better ways. Let's explore putting your money to better use into things that you can know, you can see, you can understand, and you can quantify. So instead of mutual funds, and I'm not going to cross mutual funds completely off the list. However, as a relevant and important note, I spent a good part of last year, 2024, going out to nearly all of the mutual fund providers and asked them in a formal request for information about their potential use of the woke stuff instead of actual due diligence on the investments. How many of them, in other words, were using or are still using things like critical race theory, rebranded now as diversity, equity, and inclusion, or this environmental, social, and governance, climate change, and all those sorts of things. And I asked them, if they are using those sorts of things, how are they defining it? What is the objective? So let me put that in clearer terms. It's your money. It's been my training and my wonderful duty and privilege to fight for and represent the interests of average, everyday, rank and file American workers for decades. It's what I've done. It's what led to me being recruited onto Wall Street, and then fairly quickly led to me leaving Wall Street because I saw outrageous conflicts of interest and all kinds of problems with the way that money works on Wall Street. And so I've been fighting and blowing the whistle ever since. That led to a company that I formed. I'm giving the Cliff's Notes version. If you want more detail, you can go back and watch previous episodes and some of my posts on Substack. By the way, welcome Substack. We've got a separate channel live now, in addition to Rumble, X, YouTube, and Facebook live streaming. We've got a separate live stream set up and dedicated to Substack. But on Substack, you'll see some long form posts where I talk about this stuff in greater detail. What happened, when, by whom, etc. So I'm not going to bore you with all the gory details, but I ended up starting a company based on a lot of contacts and connections all over the US and all over the world, and the great privilege and pleasure of connecting with a lot of people that led to my ability to start my own company. And it was awesome. Well, it lasted. I put my shingle out, and fairly quickly, when I got picked up by all sorts of news fighting back against the woke left, I drew the ire of weaponized regulators who have spent 5 years whittling away and attacking and coming after me. And that is all but effectively closed down. But that's okay. That is a painful, but I think necessary step in being able to use my voice and the knowledge and connections that I have in order to fight back for you, we the people. So in the progression of events, I started years ago now, was it 4 years plus? I started with a big expose on a company called BlackRock, which you probably heard of by now. Well, my first run-in with BlackRock and writing up one of some of the problems that I saw surrounding BlackRock and funneling retirement dollars into BlackRock in particular, and then other companies, started actually way back in 2007. I wrote a big letter on it, and that got me in big trouble, hot water quickly. But that should be the job of most everybody who works in finance. Our job, as I've always understood it, is first and foremost to work to look out for the best interests of you, the investor, not some corporate interest or some globalist cabal, whatever you want to call them, because they have plenty of money and they're really good at siphoning off and taking away bits of your money. Well, now we've got great opportunity, and I'm going to advocate in this conversation and through the platform that I have at UnWoke.Academy and through the Financial PMA to look at this environment in the following way. During the Biden administration, we have the mass consolidation of markets. You can see this weird looking, I work in finance. Memes are not my thing. You know, us finance guys, we're not known for sense of humor or particular artistic capability. But wait, which side is it? This side. So during the Biden administration, we really had massive consolidation of markets and very few companies got funded. Well, Trump is working on the opposite. And so hence the arrows. That's what I'm trying to illustrate here. By the way, this is not investment advice. I am not suggesting buying or selling anything. I am merely talking about the point in time where we find ourselves and the type of research that goes into UnWoke.Academy and then the financial PMA, which is the implementation, a possible way of implementing the research that we do. So for you, if you are an average investor and you've got a 401k through work, or you've got some IRA money that's somewhere being invested, hopefully well for your future, know that when you hear people talk about the markets is a sort of a euphemism typically for one of the indexes. In the United States, the big indexes are S&P 500, Dow Jones Industrial Average, NASDAQ, etc. So the weird thing, and I think we've been duped, we've been led into this sort of cage where we allow media, the news, and suddenly every time I hear or talk about the markets, I can hear like the doom and gloom sounds of the media. They always put on like the sad, sappy music when the markets are down, or exciting, upbeat, and peppy music when the markets are up. But that's just nonsensical, because all that's talking about is a few things within the market. The market really, let's clear the blinders, take them off. The market is really any company out there that's seeking public funding. And through public funding, that's where the market could be again, a brilliant concept. The concept of publicly traded markets are we, the people, become the bank. We're the ones that fund these companies. So looked at through this new lens, are these the companies you want to fund? If you've been watching this podcast and reading the things that I post on UnWoke.Academy, you know one of my favorite things to quote is an economist who recently said that if you believe in Apple's current stock price, the valuation currently, right? That's one of these up here. If you believe in their current stock price, then you believe that we will all be driving Apple vehicles, living in Apple homes, streaming Apple services, and wearing Apple devices. It's a telling statement. It means that instead of our money, your 401k, IRA, or whatever, instead of those money managers out there going and dutifully looking through and scouring the earth, and certainly, especially the United States being U.S. investors, instead of looking through all those companies and finding the ones that could be great, they could become the next exciting thing, and they're poised well, and they have good foundation, they have good financials, and they have good fundamentals, as I call them. All the fundamentals line up, and it looks like a good investment, and maybe putting some of our hard-earned retirement savings into those companies, overwhelmingly, to a vast extent over the years leading up to and during the Biden administration, it seems like everybody took their eye off the ball and instead said, well, we should keep pointing the wrong one. I'm backward. Instead of doing that, why don't we just give all the world's money to about 30 companies? Well, one of the results of that is this mass push toward just massive consolidation of capital markets, and also that newspaper article that I shared out many times on social media that points to a recent stock bonus given to a whole bunch of the top level people at firms like this one of almost $17 million. So while many of these companies have been doing terrible things, they've been doing harmful things to it, not just them. These are just sort of a representative example of, I call it about 30-ish companies. But many of them have been doing terrible things and really harming their brand. And they've been downsizing and laying off and cutting staff and just doing horrible things that the world then erupts and says, whoa, wait a minute, what are you doing? We like that brand. Stop doing the terrible thing. In return for doing that terrible harm to the company, some of these chairmen and CEOs have received tens of millions of dollars in stock bonus to do the harm. It's terrible. We unfortunately allowed ourselves to be put in this place by migrating into the use of mutual funds. I'm going to save the whole proxy vote conversation for another one because that is its own show. But please know that connected to all of your investment dollars are most likely a lot of voting potential. You have, if you're invested in mutual funds and things like it, and it goes through some other firm, you have effectively given them your voting rights. They will vote on your behalf. And left alone, they vote left, and then further left, and then even more further left than that. It's a bad thing. It's how we ended up with all these boards at companies that are super far left, ultra woke, damaging, harmful people. And they make a lot of money doing it. It's terrible. It's just a bad environment. So that's where we were. Now let's talk about where we are. Where we are is the Trump administration. And again, I'm going to reference a great document in my book, maybe the most important thing that Donald Trump has done in his political career. He released a statement that is 100% completely ignored by Wall Street, media, and politicians on February 21st of this year, 2025, called an investment policy document. It's an investment policy statement, the IPS for short. In my world, the world of investment management, those are the most important document there is. That defines how money is to be allocated. So now, backward again. I'm totally backward on the screen. So now what we have is, instead of virtually all money, your 401k, IRA, etc., being funneled into very few companies. And again, it became nonsensical. It became ridiculous in the financial markets. You get people, and I've illustrated this over and over again. You get people who are, let's say you have a 401k, just by example, or this applies to virtually anything, IRA, whatever. You've got a whole lineup of mutual funds. And maybe you say, oh, I'm going to put 10% in all of these different mutual funds. You pick a whole bunch of other different sounding mutual funds. Well, what would be your reaction if you looked under the hood and all of them are invested in virtually the same thing? They're very different sounding names from different companies and different issuers, but effectively they're just putting your money. So maybe 30 different places you have investments in Microsoft, Amazon, Apple, NVIDIA, but you've got different sounding names. And so that I believe represents the vast majority of people invested right now, of Americans in particular. They're thinking, Oh, it's great. I signed up for my 401k and I'm probably well diversified because I'm in 10 or whatever, however many different mutual funds. Normally, in a sane, rational, reasonable world, that makes sense. And you would have been properly diversified until managers agree to go woke and replace actual prudent due diligence and the costly but necessary investment research, and instead just say, oh, okay, if it has a woke label on it, like sustainable, and the company tells us they check all the boxes for diversity on their board, sure, we'll just continue to pump everybody's money into those few companies. That was awful and ridiculously broken. But now we're in the new paradigm, we're in the new world with Trump in office, and these companies are less and less funded. It can't happen fast enough in my book because I've been arguing and continue to argue that those are overfunded. They, I could illustrate over and over in 1,000 different ways how they're overfunded. Those companies, they've enjoyed that because it's crushed their competition. And the managers out there, not just BlackRock, but many of them, they made massive amounts of money by reducing the actual need to do work and just replaced it all in the fiduciary due diligence and the investigative research, the examinations of companies trying to scout out and find the next, what could be the next new thing, the next exciting fill in the blank, energy, or technology, or medicine, or whatever. Instead of searching for that, it's so much more profitable for them to say, these 10 companies check all the boxes for being woke. They have a diverse board, and the sexual gender identity of all the board members is all properly diverse according to these checklists, and therefore all the money goes to them. Well, if that company that checks all those boxes and jumps through all those hoops, they didn't even have to work anymore. They didn't have to try because all the money came their way. That's how we got to where we are. But it's changing. And as I've reported several times, many times now, out of the research, not only did we blow the whistle on lots of different companies that went woke, why they went woke, and tracked the money and followed them and showed their major holdings and continue to do that. I just did it 2 days ago, or yesterday morning, with the parent company of Tylenol. So those are the kinds of things that we want to continue to report on. Because if you don't want that in your portfolio, don't invest in it. And the best way to not invest in it is to know what you own. That led to the financial PMA. The financial PMA is a combination. Yes, we do talk about and ask you to consider, we urge you to consider certain managers. There are some mutual fund and exchange traded fund, or ETF for short. Though some managers out there didn't go woke, and they're doing a good job, and they're worthy of your consideration. But as far as building an investment portfolio of non-woke, the stuff that didn't buy in, that didn't do all the checking of the boxes for their diverse gender identity board and their Green New Deal, environmental building construction, windmills, and it's ridiculous. With these companies, they were asked to jump through hoops and they checked the boxes. But we built portfolios and have been talking about the companies that didn't go woke. And as promised, I have again looked at the investment performance of one of the women who joined the financial PMA last year, 2024. This was one of those, I keep reporting on it because I was personally directly involved in this one. Many of the other ones, we have people who have gone online to their favorite platform. It doesn't matter where it is. They like trading stocks somewhere. And we have suggested a, a broad mix of different stocks and then walk them through. Here's how to click the buy button, and then they own it. They build this big portfolio. The advantage is manyfold. Clarity, transparency, you know what you own, you know it's not woke, you know you're not funding the left, but also compared to mutual fund investing, you eliminate that management fee. The investment management fee is gone. There are trading costs, but remember the management fee had those embedded in it anyway. The trading costs, in every example I've seen so far, the trading costs are a tiny fraction. So you may see, I'm just going to use a round number because you've got discount brokerage firms out there all over the place. It's like $5 a trade or something. How many trades, if you're paying $7,000 a year in investment management fees that go to these woke investment managers who certainly aren't, many of them aren't doing a very good job. How many $5 trades would it take for you if you're just simply building your own portfolio and stop paying them? Where's the trade-off? That is a lot of trading to get to that, to even get to the current cost to you. So keep your money, I say. Keep it in your investment. Stop paying that investment management fee that gets siphoned off no matter what's happening into your portfolio. And you can do that virtually anywhere. Inside your 401k plan, inside your IRA, if you have one, brokerage account, and it can happen anywhere. As I said, there are all kinds of different trading platforms, different online trading tools, and many of them are, compared to investment management fees, are practically free. It's so unbelievably inexpensive. Unfortunately, we allowed ourselves to be lulled through a generation of all this scare tactic into the embracing spiny arms of investment managers, thinking, oh, that's the territory for those professionals. I'm going to let the professionals do it. Well, look what the professionals did. Look what they did. That's what they did. That's unprofessional. You can do better. We must do better because this is proving to be awesome. This and Donald Trump's investment policy released on February 21st gave the impetus to us to go back to free markets, to capital markets, and us becoming the bank again. That's what it is. That's what capital markets are. It's us deciding we want to invest in potential thriving future businesses. There's no guarantee, but there's no guarantee in mutual funds either. They're going to build a big mix of a whole bunch of different investments. If you give it to them, the tendency clearly seems to lean far left and arguably is very anti-American. But with this, you can build a portfolio and you can invest in companies that for years have been cash starved because we've had an environment where they didn't get any attention. They didn't get the funding because many of them didn't have they didn't jump through the hoops. They didn't check the boxes of wokeness. So they didn't get the money. Now they're getting the money. And the proof's in the pudding. Most current performance results for that woman who started, and I helped with the trades on October 8th last year, 2024, are over 58%. Over 58%, we're not even at a year. On October 8th, it will be 1 year. We're at 58% return. That is, for lack of a better way of describing, that is going from public to private markets. That's not even, it's more than a once in a generation. It's once in a 10 generations to have that sort of, in my worldview, crystal clear investment opportunity. To know that we have the huge push and the direction and explicit instruction of the president and his cabinet to stop funding a tiny, small, little microcosm within the investing universe. Stop overfunding them. This is my interpretation of what I am seeing from Trump and his administration, and stop overfunding them. And let's spread the wealth. Let's spread our U.S. capital, our investment dollars into an array of different companies. Some of them are going to tank. Some of them won't do well. Some of them will do okay, limp along, maybe moderately well. Some of them will take off. Some of them will flourish. Now that they have capital, they can do all the things that they need to do. That's where it gets exciting. You, me, your neighbor, your coworker, we can all own fractional ownership. We can have ownership in America's future. No, that's not entirely American companies, unless you want it to be. You can use that as a selection tool. America only, or headquartered in the United States. Overwhelmingly, the people that I end up in conversations with from the PMA are most interested in America first companies. So that tends to kind of lead the conversation. But I'm not going to put anything that we talk about in the position of saying that there should be no European investment or no whatever, global. By the way, as a side note, this is important. Go back and watch the episode with Justin Bernier, where we talk about not funding harmful things to the U.S. Justin Bernier, he heads the National Security Index, or NSI, that is an ETF, by the way. NSI is an ETF. Let me break that down for anybody that doesn't know what that means. National Security Index, you can find it by doing a web search. National Security Index, they strip out the adversaries of the United States, the investments in companies that are directly involved, for instance, in growing and expanding the Chinese Communist Party's military. That's happening, by the way. They strip those out and offer a basket of international investing without those bad actors. That's one example. And that is in the form of an exchange-traded fund. If you're not familiar with ETF or exchange-traded fund, it's similar to a mutual fund, but a little bit different. Worth considering. Do your research. Again, this is not investment advice. This is a glimpse into the world of research that we do and the reporting that we do, and how you can tap into and take best advantage of UnWoke.Academy. I hope that you'll consider joining the Financial PMA, or if you work in the world of finance, take everything we're doing and duplicate it. To use an analogy, I liken what we're doing at UnWoke.Academy and the Financial PMA is very similar to what some medical staff and doctors did during COVID when they couldn't stand the protocols and what was being forced on people. Some of them went independent and formed true health practitioner focused facilities. And they post online and talk about what's healthy and what's not. And I follow a lot of them because I want to be healthier. This and what I'm talking about and what we're doing is the financial equivalent. I worked in and with many of those people, a lot of those people that you see on your TV screen, on the financial news cycles. I know many of them personally. And I'm not going to say anything bad about most any of them. Many are actually decent human beings. I think they're caught up in a bad system, and they know that. They know my opinion. But I'm one of those people who I cannot, in good conscience, continue on that track. It's pretty much a given. If I had stayed involved in that, the amount of money is astronomical. I worked in an environment where and I sort of climbed the ranks in what's referred to often as a beauty pageant, which is where I want to go to next. It's not the beauty pageant that you're thinking. That's just a nickname that it has. But I had climbed the ranks and had become very successful in an area of finance that's it's fairly unique. There are not a lot of us that really dedicate and focus on this. I want to say probably about 30 of us in the country. But I saw the potential. There was so much power and trust given to me and people like me that the potential to abuse that trust is astronomical. And if I'm willing to abuse that trust, I just know with certainty if I'd stayed there, I would have a very large yacht, probably a private jet, a couple of mansions, and some really nice sports cars, if that was my style, because the amount of money is just jaw dropping. And I had a lot of people swarming around trying to influence. Well, it doesn't sit well with me, so I left, and I didn't buy into many of the things that typically happen that make the real big money. I never did any of that stuff. So that's something that I can carry with me forever. And people talk about how do you look yourself in the mirror. I can comfortably because I avoided and refused. I argued. I got in battles with managers, people that wanted me to sell stuff. And I didn't, and I won't. And that led ultimately to me finally deciding I have enough wherewithal and push back against those broken areas of the marketplace that I formed UnWoke and started calling this stuff out. But on to the beauty pageant. The financial PMA is an opportunity for individuals to work very differently with how their investments are managed. Their investments are put to work for them. By the way, it's a good opportunity to interject that for anybody looking for a financial planner, personal financial advisor, that you can't go wrong, I don't believe, with Matt and Drew. I actually spoke with them this morning. Matt and Drew at Inspire Advisors. We're not connected in any way. I did find them because I believe them to be solidly principled, wonderful, non-woke investment advisors and arranged a deal with them. If you listen to this and are curious about what Matt and Drew do that's different than Woke Wall Street, call them up. You can find previous episodes. Have been guests a few times. They even have a little commercial that I've aired. They made just for UnWoke for our audience. They will do an impact report for you. If there's woke stuff in your portfolio, they'll find it and they'll talk to you about better ways of investing. Some of that, if you do end up working with that benefits UnWoke. It comes back to fund episodes like this one. No obligation, but that's an option. The financial PMA works differently. It is simply giving you the reins. It puts you in the driver's seat, and you can implement the investment due diligence, the research on your own with a group to work with. It's designed for a couple of reasons. This gets a little bit into the weeds, but I'll just sort of tease this out there, and you can go back and watch prior episodes where I talk about these things in particular. But the world of finance really is intensely motivated to data mine you. That's something you need to know. I'm going to say it again because that's really critically important that you know this. If you have the sense, like I do, that your mobile phone is data mining you, or if you're worried, like I am, that K through 12 education is now data mining children, and they are, know that finance may be worse than those two. It may be, it's arguably probably even worse. The financial PMA is put together in a way that's designed to provide and afford for some privacy. It's also an environment where we can collaborate together. There's members who encourage each other. And if you run into something or you want to research really anything is on the table. I have people talking about insurance providers and car and home and where to bank and which banks are woke and which ones aren't. And if there are banks out there that are debanking people for being conservative. I'm not connected to that. UnWoke.Academy and the financial PMA, there's no axe to grind. We have no affiliation. There's nothing that can interfere with those conversations happening organically. So, and there's no, I can't begin to describe how refreshing and important this is. There's no impetus or drive on the part of the financial PMA to try and get all your money over to this platform that connects to some bank and sell this insurance or not. There's none of that. Zero. So all companies are all equal in all trading platforms, but we can talk about which ones we like, which ones we don't, which ones are woke, which ones aren't, which ones are conservative. For instance, and there are lots of examples. I've talked about Patriot Mobile. I've actually spent a few days on the phone with them last week when we had that ONT thing go bad in my office. I spent a lot of time talking to Patriot Mobile. I like those guys. And Old Glory Bank. These are examples of the sorts of things that should be a natural, easy, and organic part of discussion in who we talk about, how our money gets used, or using again that expression, diss the globalist left. Know where you donate, invest, and spend. To me, all of that is fair game for conversation. If we're talking about how our money is utilized, who's using it, for what purposes, is it woke? Is it not woke? Is it patriot? Is it growing? Is it MAGA? Make America great again, America first. Where, as we navigate this, I suggest that the very first step everyone should be taking is make sure that you understand where the conflicts are. And if you're working with Wall Street and then hoping that they're going to reverse the Wall Street trend, I'm sorry to say, but that's a fool's errand. The money that pushed into, got it right this time. The money that pushed into this is still there. The motivation, the desire to just collapse capital markets into 30-ish globalist companies is tremendous. It's up to us to balk. It's up to us to say, no, we don't want that. We want America first. We want capital markets the way that they're designed to work, where we're the bank and we're funding whatever we want to fund. And so far, the results, as illustrated by the woman, I keep sharing her results from October 8th through current, are extraordinary. Those are spectacular results. And I don't think that is an outlier. I don't think that's unusual. I think that what that is an example of free markets coming back into play. The money is finally, just refreshingly, being distributed appropriately among an array of different companies. As mutual funds catch up, and hopefully some of those, I'm sort of unabashedly going back to all those companies that I issued that request for information in 2024 and said, have you replaced investment due diligence with woke stuff? That I didn't put it in those terms. I was professional. And asked them, if you're using the woke stuff instead of actual fiduciary due diligence, how are you defining it? How are you defining diverse? How are you defining sustainable or green? I got no formal answers in 2024, none. I got lots of phone calls from people that I know and friends of mine all throughout the financial marketplace I would sum up the answer that I got in the following way. I'm afraid to argue because I'll lose my job. That's awful. That's just that translates in my book to I'm just following orders. Well, those orders led perilously close to what I refer to as global communism. There's a lot to unpack there. There is a common theme, a common concern among people tracking this stuff that the objective ultimately is to create an array of money managers who effectively own all of the world. Land use rights, means of production, distribution, logistics, supply chain, medicine, publishing, internet, you name it. And we were really, really headed in that direction. We still actually kind of are. You look at things like Amazon. But there's an alternative. The alternative is to fund a better, brighter future that includes capital markets. And if we do it well, and this trend continues, then that becomes the money that funds the freedom economy. It funds Make America Great Again. It funds America First. So, tying back to the conversation we had 2 weeks ago, this is your fork in the road. Which do you want? Which one of these? Did you like the Biden mass market consolidation, where just a few companies got the lion's share of overfunding? Or are you thinking more in terms of you want to see new advances in technology and business and thriving new economy? And by the way, before you answer that question, you should know that it is my absolute contention that capital markets, this is what created America's middle class. The ability of people to have an idea and go out there and make a business of it, and then eventually some of them thrived. All of the businesses are exceptions. Well, I could creatively come up with a few exceptions, but overwhelmingly, all the businesses that you admire, that you hear about, and probably invest in, they started in somebody's garage. They started as a concept in somebody's mind, and they grew that thing. But they didn't grow it with a garage and the $1,000 in their bank account. They grew it, whatever, they grew it by having access to capital to continue to grow and buy out their competition or hire new people or do research and development or buy equipment to expand. That's where this money comes in. That's where your money should come in. By the way, this isn't an all or none proposition. If you like parts of what I'm talking about, but maybe you're still tied into the notion of the Dow Jones Industrial Average, or you just want to be in the S&P 500, I'm sorry, but I would argue against it. But if you want to keep some of your money there, then do that. But I'm encouraging you to at least expose some and tell everybody that you know. Let's ring the success bell. Let's use the America First investment policy from Trump on February 21st of this year as a clarion call to do better with capital markets. We can do better than overfunding 30-ish companies. Even if you don't believe that there is an objective, that there's an agenda to mass consolidate global communism, I don't know how better to describe it. I know that's a jarring comment, but that's, in my book, that's what was planned. That's where we were headed, global communism. And keep in mind, as I say that, you may not know this, but many of those managers, those globalist banks and investment managers, many of them own each other. So BlackRock owns shares of Vanguard. Vanguard owns shares of State Street, and State Street owns shares of BlackRock. Last I checked, that's the case. So they own each other. And then there are just a few overly powerful, overly wealthy people that own those companies and control them, and they control all the direction. So when you look at alarming alerts that companies like Blackstone are buying up real estate in the United States now, a lot of single family homes, we're overfunding that. We've given them so much money that they can do that. Let's stop that trend. Defund the woke. That's what we're all about. The beauty pageant thing. I got off onto a tangent. This is a few more pieces, and I'm going to wrap up for this week. So, again, this is not beauty pageant in the way that you think. This is a nickname that was attached years ago, and I actually don't like it. If it were up to me, I would rename it the ugly pageant. Every year in the final months of the year, October, November, December, most every company out there that offers something like a 401k plan has their fiscal cycle. They may go out and look at their plan advisor. The plan advisor, that's somebody often connected to a bank or an insurance company or a brokerage firm, Wall Street or whatever, and they'll go out and evaluate that relationship. I'm asking for you to put me into the conversation. It's a very different approach and a very different conversation that they can expect than when I worked on Wall Street. Because now I can go in, and I often do, and really poke holes in all of the different existing conflicts of interest. It's, in a moment, I'm going to get to the one. There's one string attached. But just to give you a teaser on what that looks like, pretty much everybody out there who goes in and tries to sell a 401k to your company or whatever their plan is, they come in with this big glossy pitch book. We're great because we do this and we do that. And they are trained to be very persuasive. And connected to that will be a big, thick, fat book of all of their conflicts of interest, all the ways that they make money. And then the result, after somebody gets schmoozed and bedazzled and signs up with XYZ company, the next time you get a statement on your 401k plan, look at the fees. Take a look at those fees. And then imagine what happens to your future if those fees go to zero. Yes, I said that correctly. If the plan advisor, plan broker, or plan manager, whatever they call themselves, if that's eliminated, what happens to your future? You know what that is? That's a raise for America's great, wonderful workforce, our great American workforce. That is more money. All things being equal, doesn't change anything about the plan or where it is or what the investments are. Doesn't change any of that. It just subtracts that fee that gets siphoned off and makes it zero, which means every paycheck, when they're depositing money, more of the money goes into their 401k. It's simple, easy math. Nothing else changed. Everything being equal, that money stays there and compounds. That's where I am right now. So in this, it's often referred to as a beauty pageant because the human resources officer or HR department or whatever around October, November, December goes out and asks for submissions. They ask what advisors would be willing to do what, and they'll hold usually maybe a day or a couple of days of interviews with companies and people on the administration of your workplace retirement plan. Well, the thing is, there are very few people alive that have the administrative background and experience that I have. I've worked all across the nation for decades. I've worked on public utilities, state-run plans, hospitals, universities, many school districts, for-profit, not-for-profit, union, non-union, you name it. Very few people, and you won't find many people that will argue that I'm wrong on this. Very few people have the background and experience I do. But I sit in a very different spot because I left Wall Street and decided that I'm not going to be tied in and affiliated with pitching harmful products. I don't allow it. I also am very focused just exclusively on that, where a lot of firms, most of them, I argue, find great joy in selling that 401k plan and then pitching everybody, all the employees, on that bank account and their insurance and their kids' 529 college savings plan and catching rollovers and stuff. Well, I started years ago not doing any of that. And I do the whole thing for a flat fee of $5,000. Sound like a lot? Just know that the average is probably around $70,000 per year siphoned out of your 401k plan. And I approach it differently because I go directly to companies, encourage them to pay that directly. I'm a professional consultant, just like working with an accountant or lawyer or anybody else, which means tax write-off. So small businesses in particular, when I'm given the opportunity to have this conversation, often love it, because usually it's a small number of people that represent the lion's share of that 401k plan. And when they see the numbers on them keeping whatever, fill in $125 a pay or something that gets siphoned off, instead of that money just constantly evaporating out of their 401k, when faced with that opportunity to say, wait a minute, I can pay this out of corporate profit, get a tax deduction, and keep all of that money in my 401k, that's a world of difference. Very few people have that conversation. I'm looking to do that. So, and this is a direct result of weaponized regulators coming after my business. I know I'm into the weeds, but that, you know me, I'm going to do that from time to time. This is my passion. This is what built my career. This is what I've done for decades. And it's how I was able to launch my company that regulators eventually went after. I actually started as fee-based 401k. That's still my website. It redirects to my current company, and fee-based 403b. Those are two different types of retirement plans. And I've been having this conversation. I even have graphics that date back to, I want to say about 2006, which was 6 years before all of the disclosures that I'm talking about were required. 6 years before all of the fee and interest, a conflict of interest disclosures, that was July of 2012, that became mandated. I got a 6-year head start on all this stuff back then. I'm looking for introductions. If you're a small business owner, you should definitely ring me up or consider. Compare them side by side. You will be amazed at the world of difference it represents when your 401k advisor, broker, whatever, when those fees go to zero. And if you're an employee of a company and you get those deductions, ask around. See if you can get me included. I will join that beauty pageant. That's how it's jokingly referred to, of all the advisors coming through and parading themselves. I'm going to bring a very different conversation. That brings me to my final point, and that's the string that's attached. I want the opportunity, I insist on the opportunity with anybody who considers this offer to add some non-woke investment alternatives. If you're wondering if that's a conflict, it isn't. I'm not connected to any of them. I don't make any money off of some manager who doesn't go woke. What I want is a better future for the United States. So when I talk to a 401k plan about adding something called self-directed brokerage accounts and giving the employees options to invest in ways that aren't woke, and when I talk about exposing BlackRock, Vanguard, State Street, and others for leaning heavily left, I'm hoping to move the needle. I'm hoping that many, many employees of companies out there decide the light bulb goes on and they no longer want to be part of the dismantling, disruption, and destruction of the United States. That's my mission. That's why I formed UnWoke.Academy, and that's the objective of this piece, looking for introductions to those beauty pageants taking place all across the country. If you're curious about what that looks like, I've done some other episodes. I did 3 episodes in sequence on Behind the Veil of 401k. I talked there about all of the ways that companies can siphon off fees once they sell you that 401k plan. None of it should be wanted. I hope that you will consider getting my name into the mix next time there's a beauty pageant. So that said, I'm not seeing any comments here, but again, I want to, thank you for that. Yeah, it's a great comment there. Unfortunately, I can't read that one on air, but the objective here is diss the globalist left. Know where you donate, invest, and spend your dollars. It does shape the future. Let's get out of the place that we're in. So feel free to send any thoughts, questions, comments, or concerns, or if you have the name or ticker symbol of some investment you'd like my research on, send it to info@UnWoke.Investing.com. I'll dig into it and we'll get some exposure. I do have somebody who's talking about Fidelity, but I don't have enough detail yet. I'm hoping to get that detail on that one. And we'll do a little deep dive into some Fidelity funds. Don't forget to follow, like, share, and comment on whichever platform you're on. Thanks again for joining. This has been another live stream of UnWoke.Academy and the Financial PMA. Until next week, take care.